Hi everyone, Josh Gilbert here and welcome to Stock Break, where I give an in-depth analysis on public companies in under 5 minutes, breaking down their fundamentals and potential valuation. So let's dive in. Today we're going to be looking at Carnival, but just a quick reminder before we get started that this presentation is for educational purposes only. It should not be taken as investment advice or a recommendation to buy or sell any financial instruments. So with that out of the way, let's get started. We're going to take you straight back to the beginning. We're going to dive in and have a look at Carnival's official website. Carnival has grown to become the world's most popular cruise line with over 28 ships and serving 5 million guests every single year. The business was founded in 1972 and listed on the New York Stock Exchange in 2003, but the business is now actually dual listed with another listing on the FTSE 250 in the UK. So having a look at the share price, shares currently trade at around $17.56 US, still well below the record highs that we saw back in early 2018 and around 2017. Again, obviously the COVID pandemic had a big part of that. And since that time, shares have obviously been in decline. Even though before the pandemic, we started to see revenue growth slow, that's why we can see that sort of continual decline even before COVID-19. That obviously sunk cruise liners. And then throughout the pandemic, the business obviously amassed a large debt position with total debt sitting at around $28 billion at the end of 2023. This was obviously in order to survive a period with no passengers. But fast forward to 2024, travel stocks have got their mojo back. Carnival is one of the big benefactors as cruise demand bounces back above pre-pandemic levels. In the second quarter of 2024, the business reported record revenues, operating income, booking levels, and customer deposits. This also saw the business raise its guidance for the full year 2024, upgrading net income for 2024 by $275 million US. And as you can see on the screen, pretty much all metrics growing higher compared to the same period last year, and importantly, moving back above pre-pandemic levels. Look, if we want to understand how the business makes its money, we've got to know the business. The business has 4 main revenue segments. North America and Australia account for around 67% of revenue, and Europe and Asia account for 30%. The remaining 3% comes from cruise support, tour, and other. Importantly, bookings and occupancy continue to rise, as we can see on the screen. Occupancy is still yet to climb back above pre-pandemic levels, and that is an important tailwind for the business. Despite reporting record numbers, there's still room to grow, and this is being supported as well by higher ticket prices and, importantly, an increase in onboard spending. So as we can see here, higher ticket prices is key, but also we're seeing passengers spend more on their cruise ships. Not only are consumers booking holidays, they're spending more when they get on board. The business also generated $2.1 billion in free cash flow for 2023, which positions it to continue reducing its debt. If the company can continue to see growth in free cash flow over the next few years as profitability grows again, Carnival can reduce its debt positioning, providing it with a solid tailwind for the stock moving forward. And of course, we'll look to the Federal Reserve for any rate cuts to help Carnival's leveraged position as well. Look, the cruise industry is set to continue growing as travel demand remains strong. The business currently trades at a modest valuation of around about 15 times forward earnings, which prices in the risks of a high leverage position and the potential for an economic slowdown. But the Guru's Focus tracker ranks Carnival as modestly undervalued. Although Carnival is seeing a great rebound, it's crucial to weigh these risks alongside the fantastic numbers to determine if Carnival's stock is truly undervalued or if it's appropriately priced at current levels. If we have a look at Bloomberg's analyst recommendation, Carnival has 21 buy ratings, 3 holds and 2 sells, with an average price target of $22. Look, it won't be all plain sailing for Carnival Corp in the future, but if it continues to deliver on earnings as it has done in recent times, keep growing its cash flow to reduce its debt positioning, and keep passengers coming back, then a brighter future might be on the horizon for Carnival shares. I hope you enjoyed this episode. Let me know which company you'd like to see next, and see you next time on Stock Break.